Okay, welcome everybody. Welcome to Making Money in the Markets with VectorVest. I'll just transition. So here I am live. It's 11 o'clock Sydney time equivalent. I'm presenting in Queensland and it's my pleasure to have you along today. All right, with that said, let me just transition across today. I've got some very interesting stuff to show you today. So first and foremost, please note our license numbers. In addition, please note general advice only. All right, so I'm licensed to give general advice. I cannot give you personal advice. I'm not licensed to give any personal advice. Please speak to your personal financial advisor for personal advice. And as always, past performance is no guarantee of future results. Forecasts, back tests used and discussed today, it's a guide only. Okay, as long as we're all clear with that, let's get into it. With that said, let's close out of here. I'm going to jump straight back into the trading system viewer. I know we've been looking at it a bit in recent times because it's worthwhile looking at, because our trading systems, these are all of our trading systems that we track for educational purposes. They are booming at the moment. And you can see over here, if I just bring this across and pull this out over 1 year, you can see the returns over the last year. Very impressive. You can look at the returns over the last month. And one of my favorite all-time stock systems, let me just do this. I'll just pull out a bit more here and move this out a bit more here just so it emphasizes it a bit more. Here we are. Is this one here, the best stocks less than $3-10. This is one of my all-time favorite trading systems. It's made me some very good money over the years, and I'll just give you a bit of a peek into it, and then we're going to drill in a lot further. So this is the equity curve, and if you look at the equity curve, let's zoom it in a bit here. Phenomenal equity curve. We've tested this all the way back from 2007. We launched this, when did we launch it? I think in 2017. So we launched it around about here based on all the back testing we're done. And it went from here up 250%. Now it's up over 1,000%. So it's gone up 4 or 5 times since we've released it for educational purposes. Now I just want to be clear. These trading systems here are for educational purposes. But of course, many of our subscribers love them and track them for themselves. And so each and every day you can come in and you can see exactly what is being held. And I'm going to show you how we find those stocks today. All right, so this is what's being held right now in the trading system. And you can see some pretty impressive returns. If I look at the most impressive ones, Fleetwood picked up on the 26th of March this year, 2025, up 23%. Sigma Health picked up on the 22nd of January, up 14%. Costgate picked up on the 11th of July, up 6%, etc., etc. We'll drill in and we'll have a look at the trade history, because of course those alone are not going to explain a lot of this growth. Many examples like that have taken place. Okay, so before we do that, what I want to do here is I want to go and show you what makes up the search. How do we find these stocks? You know, what exactly is this best stocks less than 3-10? So if I click on the trading system details and bring it across here again, you know, how do you find these stocks? How did you find Colesgate on the 11th of July? You know, how did you find, you know, what constituted one recommending? Now, when I say recommendation, I'm not giving personal advice, but the system said Fleetwood is going into the system. So it's up to you as to whether you want to follow it or not. 26th of March. How did you find that? How did VectorVest bring that up? And so to get some further insight into it, we have the trading system rules. And so before I load that up, I'll just read this out. The 10 stock model portfolio is designed to find, this is a 10 stock model portfolio. We kept this wording in here because it was originally referred to as the 10 stock model portfolio. And then we changed it to best stocks less than 3-10, 10 being for a 10 share portfolio. And of course, it's finding stocks under $3. Anyhow, it goes on to note the 10 stock model portfolio is designed to find stocks which exhibit strong price performance through the use of our powerful comfort index indicator. Remember last week, if you tuned in last week, remember what we discussed with the comfort index. If you missed last week's presentations on YouTube, go and watch last week's presentation. Well worthwhile. Our comfort index indicator, when it breaks above 1 and keeps rising, it shows us that a stock is going into a very strong uptrend on average. We've seen it time and time again. The aim is to lock in 30% gains while limiting losses to 15%. So once we find these good upward trending stocks, we're going to put on a 30% gain. We're not going to get too greedy. We'll take our profits at 30%. And we're also not going to let our stocks slip away too badly. At 15%, we'll cut our losses. Through the use of market timing, so we're going to buy when the market's going up with our proprietary market timing tools. Through the use of market timing, along with the risk and money management rules, this portfolio has provided a significant amount of winning trades over the years. The portfolio withstood the global financial crisis and has powered on significantly since 2012. This trading system was formerly known as a 10-stock model portfolio. All right, so let's have a look at the rules. Click into the rules. Right, so what we're going to do here is we're going to buy using this fill here. Now, it looks a little bit technical when I look at it like this. Let's put that to one side. We'll come back to it. What we do in VectorVest is we use this powerful tool called UniSearch. Here is the search: best stocks less than $3-10 portfolio. So this is the search that is applied. Okay, let's see what it entails. And so I'll run the search again on 1 May. All right, so this was run as of 1 May. If I run it as of current date, there's a reason why it was run on 1 May. I'll come back to that shortly. If I run that again there, for example. All right, what I'm going to do here is I'm just going to put it to the top one, just so you can concentrate on the parameters rather than desperately looking through the stocks. I'll bring up the stock shortly. All right, so first up, VST must be greater than 1. What's VST? It's our master indicator. Here it is. VST, value, safety, and timing. So we're looking at the best combinations of both fundamentals and technicals. And so, if I look at the stock here, SKS Tech, it's doing what we wanted to do. It's going up. So there's the price going up. Look at the comfort index. Remember that from last week. The CI comfort index has been above 1 and holding above 1. So remember a bit of a recap from last week. If you're finding those CI stocks, let's do this. Let's change it to being an area where the CI breaks above 1, holds above 1, so around about at 30 cents. I don't know if I would have been very keen to buy a 30-cent share, but nonetheless, once it went to over $1, I'd certainly be interested. So here, for example, now it's not a penny stock. CI continues to remain above 1, doesn't dip below 1, keeps holding above 1. Look how the price went from, 30 cents all the way to, what's it now, just under $3. Okay, so it's finding those high CI momentum stocks with good fundamentals. And so the fundamentals here, we can represent this via earnings per share. Now this earnings per share, in previous webcasts we've discussed this. So again, if you need a recap, go and have a look at some of the previous Making Money in the Market sessions. But what's really powerful about the EPS is we've seen time and time again companies that are growing their earnings. You'll see the correlation: rising earnings, rising share price. So this EPS is a proprietary 12-month leading forecast on earnings. It's not going to agree with your broker. It's not going to agree with Thomson Reuters or Bloomberg. This is proprietary. This is a 12-month leading forecast in earnings. And here the earnings start rising. Here they go. And up goes the share price. We combine that with the comfort index. It breaks above 1 here. In combination with earnings rising, it's game on type thing, right? So you've got your fundamentals and your technicals kicking in. All right, so coming back to here. So the best combination of fundamentals and technicals. So VST is on a scale of 0 to 2. So the higher above 1, the better. Anything above 1, it's good. The higher above 1, the better. Price, less than $3, hence the name. Best stocks at less than $3. But we're not going to go super penny stocks by any stretch of the imagination. We're going to put a filter in to say stocks will be between $1 and $3. Between $1 and $3. And so I'll just put the camera on here for extra effect. Why between $1 and $3? Typically, companies between $1 and $3 are some of the most explosive companies in Australia. You'll see some of the most explosive growth, provided that you get those companies right. And so we've often seen a company go from, like $1.40 to $4 or $5. Phenomenal growth. Can you get that type of growth on a big blue chip stock that might be $40, $50, $60? Could it go to $180? Absolutely. Certainly we've seen that many times. But we've seen more so companies between $1 to $3 exploding up in price. It tends to be more likely to take place, at least in recent times with some of our back testing. So that's why we did it. Think of it as like a mid-cap. It's not looking for the super blue chips, it's looking for the up-and-coming blue chip type companies. Average volume must be a lot of trades, on average 50,000 trades a day or more. So we're not going to trade any thinly traded stocks or invest into any thinly traded stocks. The comfort index, as we looked at before, greater than or equal to 1.2, so we're finding a really good upward momentum. And on the day, of course, we're not going to be trading in a trading halt or whatever have you. There's got to be liquidity. Shares are going to be changing hands on the day. And then once we find all these parameters, we sort it via the best combinations of fundamentals and technicals. So let me do this. Let's show you the top 5. Right here, the top 5 as of the 9th of September. So if I graph these ones here, we can have a bit of a look. Right, so we look at this one, and let's look at the next one here. ALK, Alkane Resources, brilliant. CI breaks above 1. Earnings are rising, up it goes. Very nice. Well, this one here, sort of it has that turning point. So it's picking up on the turning point. Earnings just starting to pick up. Is this early days for a big breakout? Time will tell. This one here, very nice. We've seen the CI breaking out a couple of weeks back. Earnings trending up. This looks like it's in establishing a pretty good trend. This one here, CI breaks above 1. Earnings are under a little bit of pressure, but look what VectorVest has done. It's picked up that turning point, big pop up in the earnings. Looks like it's game on again. All right, so here it all is. Now, we noted in the trading system that we put together here. So if I come back to the trading system and bring this over, we noted that we use this in combination with market timing. So we spoke about using market timing here. So we're going to buy long when the market is going up. So we're going to look to buy in when the market's going up. Let me close out of here and show you what I mean. So what we're going to do here is we're going to look to buy when the market is trending up. All right, so when the market is trending up. So here's one of our most conservative timing signals. This is the average of all the stocks that we track in Australia, right? And what we're doing here is we're looking for turning points across the average of all the stocks that we track. Here we said to our subscribers, there's a turning point to the upside. Here we said to our subscribers, here's a turning point to the downside. This one was short-lived. Here's a turning point to the upside, turning point to the downside. So this market kind of whipsawed a bit. Turning point to the upside, very nice trend on that one. So the question then is, what if you had logged into VectorVest on the 1st of May, seen, yep, it's a green signal to consider going into the market. You went to Unisearch and you said, you know, I quite like that best stocks less than $3 type methodology. And you went here on 1 May, there we are, the green light had popped up. And you said, okay, I'll run the search. Here we are at 1 May. What if I was to just buy those 5 stocks? I'm not saying you should, but what if I just were to buy those 5? See how they would have turned out. All right, so those 5 just on 1 May with a turning point using this powerful search. There we are, 27% when the market had gone up nearly 9%. So you outperformed the market 3 times. Very nice. But then the question comes down to, well, that's fine if I was to buy them, but when do I sell them? The market's not always just going to be trending up nicely. There will be difficult times from time to time as the market goes through cycles. Then what? Anyone can buy a share, but how do I manage it going forward? And this is where the power of this trading system comes in. Because this system will have rules to tell you when to buy, what to buy, and when to sell. So clicking on the rules, so we work through the rules, we're going to buy long. All right, we're going to use a system called GLBRT Kicker. Slightly more aggressive than what I've just shown you. So if I come back to the graphs here, change the signal. All right, it kicks in a little bit earlier. Every time there's a green light, it tells you it's okay to be in the market. All right, so the rules are every time there's a green light, you'll pick up a couple of stocks each time until you're fully deployed into 10 stocks. So open a maximum of 1 position every day, provided that there's a green light. All right, so here would have been your first entry point. If you were starting at that point in time, I'll just hover my mouse. What's that? 23 April through to the 30th of April 2025. So again, you'd need to go look at the calendar on the working days, but there were a couple of working days there. So you might have deployed 4 to 6 out of your 10 positions at that point, and then you probably would have done your remaining 1 or 2 positions or 3 or 4 odd positions here. So chances are you would have been fully deployed by then, because not one green up triangle, so to speak, green light is not going to represent. It's not going to represent one day. There's several days packed up in here. So chances are you would have been fully deployed around about no later than here. And so you got all of that blast off phase as the market went up. Same as here. There's your green light. Here's your green light. Here's your green. You probably would have been fully deployed around about here, and up it would have gone. Okay, so I'm going to come back to my trading system rules here. So we'll pick up a maximum 1 position each day, and we'll manage them. Now, how are we going to manage it? We're not going to have more than 2 stocks in a sector or industry. We're not going to ever buy more than 5% of a stock's average daily volume. In addition, we're going to use a 30% gain, 15% loss for our stop loss, right? So that's what we're using for our stop loss. And so taking all the rule sets here, applying, reapplying the rules over and over again, all right? When the green signals come in, etc., we buy in. So this is using all the rules over and over and over again, okay? And so going back to 2007 through until close of business yesterday, these have been the returns. And right now, this is currently what's being held. What I'm going to do now, so I'm going to give you a bit more insight. I'm going to show you what has actually taken place over the years. And to do that, I'm going to click Paper Trade and Portfolios. And I'm going to click Follow in the Portfolio Manager. I'll open it now. And what this will allow me to do is to drill into all the nuts and bolts. And what I love about this type of layout is I can change it to read however I want. Layout, and I can go and move my columns up or down depending on what I want to see. So if I'm a dividend investor, maybe my most important indicator here is to give me my franking credits and my dividend yield. All right, so there's the price, fully franked at the end of the year, 100% franked, but in the interim part of the year, no franking credits, but looks like the final payment's fully franked. This one here, Fleetwood, both interim and final dividends are fully franked at a whopping 8% currently, but we can also see it's done some pretty good returns in terms of the share price. You know, so just to give an example, these are all the sort of things we can look at. What I'm more interested in right now is to show you what has taken place. So if I click Reports, this goes back all the way to 2007, and I'm going to look at the trade history. So view trade history. Here are all the trades, right? Looks like a lot of work, but it's not. It's about 15 or 20 trades a year to get those phenomenal returns. So it's up to you. It's not everyone's cup of tea. I'm going to look at the most recent closeouts. All right, here we go. It's a bit small. I wish I could make this a bit bigger for you guys, but I can't quite sort of do that at the moment. But anyway, nonetheless, don't worry. Let me just read it out. So Kingsgate KCN was picked up on the 24th of July, 2025. It's currently being held. No, it got closed down on the 4th of September for 20% returns. Very nice. Wagner's WGN ticker code picked up on the 17th of June 2025, closed out on the 29th of August 2025 for 29% returns. Thank you very much. Next one, SRG Global picked up on the 19th of May 2025, closed out on the 25th of August for 31%. Remember, we're looking to target 30% and we're looking to minimize our losses at 15%. Next one, Superloop SLC picked up on 21 May, closed out on 1 August. Thank you very much, 29%. So you get the idea. Now, if I show you the percentages, so just run your eye down here. So that's 60, 50, 50, run lots in the 30s as you'd expect based on the trading rules. Now on the downside, here are the numbers. Let's show you the worst trade ever was negative 47%. And then after that, it was pretty much in the 20s. So if you look at the average across the losing trades, it loses around about 14 or 15%. And across the winning trades, as you'd expect, it averages around about 30 to 35% on the winning trades. And so if you repeat it time and time again, using the rules, this has been the outcome. That has been the outcome. And so if I click on reports, let's do this. Let's look at, now there's a tax report. That's not the one I want. I want to view a summary report. That's the one I want. Here we go. See if I can blow this up a bit, make it a bit easier to see. So we stress tested this all the way back in 2007. So it started off in 2007 with $100,000, and it's now got a total value of 1.2 million. It's gone up about 12 times since 2007. Year to date, this one is for this year so far, it's up 37%. Since inception, it's done 1,100%. So, what's the work rate? What does it entail? Right, here we go. The work rate. Overall, 447 trades. You might gasp, oh my goodness, that's a lot of work. Well, hang on, 27 to 2025. So 17, 18, 19, 20, 22, 23, 24, 25. What's that about? Call it 18 years, right? If I've done my math quickly, just my head there. Approximately 447 divided by 18. That's about 24 trades a year divided by 4 per week. So, or divide that through by 12. Sorry. So it's about 2 trades a month. 22. Yeah, it's about 2 trades a month. On average, you're doing about 2 trades a month. A trade a fortnight. So you're buying and selling on average within a fortnight. I don't think that's a lot of work for those type of returns that you could be in the running. And again, I'm not saying, and again, this is general advice. We don't manage your money, right? So just be clear on that. I'm not a fund manager. I don't manage your money. You don't call up VectorVest and then we put you into that portfolio. This is purely for educational purposes. Many of our subscribers follow the system, right? So if you want to do that, that's your call. We can't advise you what you should or shouldn't do. Many of our subscribers just follow the systems as it stands. All right, so it does about 1 a fortnight. Here it all is. So these are the ones currently in there, and away you go. So if I look at what's currently being held, so let's see, purchase date. Let's see what was picked up for 2025. Let's click purchase date. 1, 2, 3, 4, 5, 6. 6 have been purchased, right? So these 6 here have been purchased. Here's the returns: 2%, -3, up 6, up nearly 5, up 23, up 14. These were ones from previous years still being held. All right, and then in addition, report trade history. So if I go into trade history, and then let's just see what was closed out. So I've shown you a few in there, 6 in there already, and then what's been closed out for 2025. Here we go. There's one for 30%, 32%, -12, +24, -8, +27, +31, +29, +23, +30, -12, +27, +29, +31, +29, +20. Wow. Lots of winning trades, couple of losers. Overall, it's up 37%. So there it is. And so what a lot of our subscribers will do is they will set up alerts. All right, so you can come into here, you can click on here and get all the alerts. I'm not going to go and set that all up for now, but what you can do is you can go and set up alerts. So you get alerts as to when things are changing, what's taking place. You can get those alerts emailed through to you. All right, so there you go. That's how you make money with VectorVest. I like to use the Unisearch on some of the best performing portfolios, so I can then come and pick and choose my very own stocks. I get confidence in that this is how the trading system is performing, and then I like to actually go into the nuts and bolts and run it for myself and go, okay, here we go. I'll just show you here as of, I'll show you something that was interesting. Let me go back to watch list view. Where was it? Yeah, here we are. So what I did here is I had a look at what these stocks were on 1 May 2025, just out of interest. So remember this, I saw a turning point in the market. So sorry, I'm jumping around a bit, but you'll see what I'm getting at. So there's the turning point in the market. If I went back to 1 May, ran the Unisearch as of 1 May, these are the ones that came back. All right. So these are the ones that I got. I then took these, put them into watch list just to show you the average. Now I've grabbed all 10. Here I was running 5, but if I grab 10, all right, so that's what I did. I just took these 10, I quarantined them off into a watch list, and I just wanted to look at the average of those 10 stocks return on the search. This is quite telling. So on 1 May, this is the average of all those stocks. Look at the earnings on average. Look at the comfort index on average. It's doing everything that I wanted to do. The earnings are going up. The comfort index is going up. Now the market is turning. This is the overall market overlaid across the average of those 10 stocks return per the special search. What do you think is going to happen on average? You've got a very good chance that will continue to go up. And so there it is. The power of that search. So you might want to jot that one down. Go and have a look at, all right, under searches, precision trading, there's a search there called best stocks, less than $3-10 portfolio. Go and run that search. See what you think. Next time there's a turnaround in the market, because there'll come a downturn again, and then there'll be a green light again when it pops up. Next time there's a green light, go and run the uni search. You can do it right now because you're still in a green light. I don't know whether it's going to keep lasting. It's sort of starting to bounce down a bit, so just caution. But next time there's a green light, the next blast off phase, hop into uni search, run the search, jot down the first 5 or 10 stocks, come back in a couple of weeks' time, and then just look at how those stocks performed. I'd be very surprised if those stocks, on average, provided the market did continue to rally, didn't do very well. Now, again, I can't advise you what you should or shouldn't do with those stocks, but just do that as a bit of an experiment to see how they play out. And so you can go back in time. You know, you could go back and look at the last one. This was very short-lived, right? But you can have a look here, 24 January. So you could come back here, change the search, go back to January. The green light will pop up, 24 Jan. Run the search. These are the stocks. Out of interest, just how did the top 5 go, right? From 24 Jan through until 9 September, 19%. If I come back to graphs again, let's go back to this one. Really good breakout at that point. 19th of September, 2024. Let's go back here. All right, 19th of September, 2024. Run the search. Let's grab, let's say, the top 5. Running through until now. Oh my goodness, look at that, 49%. All right, 2 of them didn't perform. 1 didn't perform very well. 1 was neither here nor there, but look at that. Absolute power return, 210%. Let's quick test, say, the top 10. See what the top 10 did. Here we go. Is it going to have much more of a difference? Wow, look at that, 70%. All right. This uni search parameter, which I built many years ago, has stacked up. It's stacked up in the back testing. So we use this tool called Backtester to design it all. All right, we won't cover that today. All right, and then we stress test it. We keep monitoring it, and if it stacks up, it remains. And here it is today. Now, the last thing I'll leave you with, just to prove that it's not just, you know, back tested for perfection and smoothed out, and well, with the wisdom of hindsight, look, these guys have made it look really good. I'm going to show you the building blocks right back in the early days. So on our website, you can check it out. We have a blog web page. I'll just accept that. And here we are. There I am, Russell, and my father, Rob and Mike, and we put this together. The power of sticking to your trading plan, this 10-stock model portfolio. This was back in 2020. So this essay was written back in 2020. And you can see here, then referenced as well, per the VectorVest Australia blog archives back on the 13th of June 2017, there's a blog entitled Growth Portfolio 10-Share Portfolio. So this is how it eventuated. You can see, so back then, you know, hi everyone, I got thinking about a revised growth portfolio for consideration. We have an excellent growth portfolio called the SMSF Growth. And anyway, then I went on to write about developing this to becoming a 10-stock portfolio. I put all the rule sets, and so it was born, so to speak. And then from 2017, we then basically started to track it. And by 2020, we were writing about it on a regular basis, and we created a video, the whole 9 yards. You can go on our webpage and go and look at the blogs here. Just look up Growth Portfolio 10-Share Portfolio, and you can find it. So there it all is. And so you can see the building blocks as it took place, as it unfolded. And here we are today, several years later. And it doesn't surprise me in the slightest to see this continuing to deliver. The more back testing and stress testing you do, the more confidence you'll have. Now, I'll go on record for noting here as well, and the last thing I'll leave you with, I thoroughly believe in back testing. I know there are analysts out there that say, well, past performance is no guarantee of future results, and, conditions are totally different historically, so therefore we don't back test. I'm totally I'm counter that. I think the more back testing you do within reason, at least 10 years, I like 5 to 10 years, the better your chances are of success. I've learned so many things with back testing over the years. I've learned in Australia that blue chip stocks typically will perform better over a longer term based on the back testing I've done with a wider ranging stop loss. On the huge amount of back testing we've done. These are sort of things that I could never get knowledge of if I hadn't done the back testing. All right, so and that's why we're able to deliver these types of systems, because we've got the tools to back test. Anyway, hope you've enjoyed the presentation today here. If you're not a subscriber, become a subscriber. Go and have a look at the 10 stock model portfolio. In fact, right now on our webpage, you can go to www.vectorvest.com.au, click on take out a 30-day trial. It's 99 US cents. Call it $1.50 Aussie for $1.50. Trial out the system. Hop into the system as soon as you get it for $1.50 for 5 weeks to trial out. Go and have a look at the 10 stock model portfolio in the trading system viewer. Go to the uni search. Go and run the search. Go and do all the great stuff I've shown you today, and see what you think. All right, I'm gonna leave it there. Sorry, I wasn't actually sharing my screen. Sorry, just to recap. Go to uni search. Go to the best stocks less than $3-10 portfolio under precision trading, and of course go to viewers, trading system viewer, and have a look there too. I'll leave it there. Hope you got a lot out of it. Until next week, bye for now.